Well, hello, everybody, and welcome to another edition of On the Money with the Certified Financial Group right here on News 96.5 WTBO's Ask the Experts Weekend. We are here with the Oracle of Orlando, Joe Burt and Roger Johnson here live in the studio. Good morning, gentlemen.
Good morning, Kyle.
Good morning.
I'm not. How are you guys today?
We're doing okay. We're glad to hear you got your voice back.
Yeah.
I understand you're out of commission there for a while.
Got the voice back.
Trump rallied you in? Is that what happened?
That's what it was. Broadcasting 7 hours in the rain and humidity.
That was it.
Will always destroy your vocal
you're a trooper.
cords.
We're glad you're back.
Not good for a radio man.
Yes.
No. Wednesday was bad. Thursday was worse. Came back yesterday. Got the energy back. But thanks to the guys at Care Spot, they gave me the right stuff.
Right stuff will do it every time.
And I got back here on Saturday to answer the phone calls with you guys here on
You're
the
the
radio
man.
this
You're
morning.
the man.
So, Joe, what type of phone calls am I
Roger
answering
Johnson
today?
and I are here live this morning to take the questions that might be on your mind regarding your personal finances. As we say, we go through life and trying some of this, trying some of that, wake up at 55 years old, look across the kitchen table at Loretta and say, Loretta, honey, one of these days that paycheck is going to stop, and how do we continue that income so we can have what we call those golden years? We went to that seminar a few years ago. We bought this thing. I'm not quite sure how that works, and we've heard the stuff. My brother-in-law tells me we ought to do this, and, what are we going to do? Because they don't teach us this stuff in school.
No.
So we are here to clear up the mind fog and to clear up the dents and bruises that you might have, and we're your financial body shop. So Roger and I are going to bring out the Bondo and answer questions regarding your personal finances. And we are one of the few radio shows, in fact, the only radio show in Central Florida that's hosted exclusively by certified financial planners. We have 12 certified financial planners under our roof. All the planning and investment management with our firm is done by certified financial planner professionals, and we're very, very proud of that. And we're here to take your calls live because some of these shows, it's a 1-hour infomercial where they record it and they just tell you facts and stuff and things, but we are here to help you. So if you have any questions regarding your personal finances, the lines are wide open, and those numbers are
844-220-0965. That's 844-220-0965. We also have the text machine up and running as well, 21232. If you just have a quick question, that's about 160 characters because that's all we can see on the screen. We don't want you writing a novel because it will get cut off, and we don't want to miss any key details. So 21232 if you have a quick question. But if you want to have a nice, longer conversation, it's 844-220-0965. We're also on Facebook Live. Go to Facebook.com, click on Certified Financial Group in the search bar. You'll see our page, and you'll open up the video, and you can watch Joe Burt and Roger Johnson do the show this morning.
And we're fun to watch.
Yeah, we are fun to watch.
Man.
No, we are just one.
You're fun?
Right.
Okay.
Yeah, just look.
I've been looking at you.
Before we get too far into the program today, we want to let our listeners know that through a strange sort of circumstances, Gary Abley has a couple seats left for this morning's healthcare options in retirement.
Oh,
this
that is
generally
a strange
sellout
sort of
crowd,
circumstance.
standing room only. And this is the one where he answers the questions that you might have about those Medicare options that you have when you get to be 65. Your mailbox explodes with all that information. So he's going to talk about Medicare, Medicaid, and all that health care stuff, those decisions that you have to make. He's not going to sell you anything. Leave your checkbook at home. He's got some fresh coffee and some goodies to give you. So he is right there in our office, right there in Altamont Springs. You can swing by right now and get a seat.
There's about 6 chairs available, and, of course, it just started at 9, so you'll be stepping in a few minutes late, but I'm quite sure Gary and folks will appreciate that.
So he
how long does it last?
He can accommodate you till 11 o'clock. So he's just getting started. So if you're up in the Longwood area, you don't need just throw on your Bermudas and your T-shirt, nothing fancy, flip-flops, and you can come on by. So once again, that's at our office in Altamont Springs, right there on Douglas Avenue, just south of 434 and just west of I-4. You can see our office right there from I-4.
What's the address I'm putting in my GPS?
1111 Douglas Avenue. 1111
Douglas Avenue.
4 ones.
Simple enough.
You got it.
So
come on by and say hello to Gary.
All right, 844-220-0965, the number to dial us up. Topic of the day, managing debt the smart way.
Yeah, we talk about a lot of assets movement and how to save for retirement, but the other side of the balance sheet is your debt, and it's really important to kind of look at it and make sure. We've had a couple of instances lately where I've met with some new folks, and they have accumulated some assets and everything, and then I say, okay, now what do you owe money on? And it turns out they're carrying debt on a credit card for no good reason, just because it's comfortable and they didn't want to use the cash to pay it off.
So I think it's really worth looking at that and analyzing it. So there's basically, a two-step process.
Tell us about it there.
Yes, I will. Well, first step is list all your debts. Okay, mortgage, cars, student loans, credit cards. List them all. Then list the amounts you owe. And then more importantly, list the percentage rate that you're paying on these next to each one of them. That's step one. Step two, kill anything over 5%. Yeah, I make it sound easy. I know it's hard. But figure out a way to pay those things down, pay more than the minimum payments on those debts that are over 5%. And then, of course, there's really a third method is make sure this doesn't happen again. Try to never let these high interest rate things get under your skin. Most of us have a 3 or a 4 or 5% mortgage on their house, and car loans. Heck, you can't buy a car for cash anymore. They always want to, give you a really great interest rate, so they like that stream of payments coming in. So that's a 2 or 3% bill that you got to pay. Okay, it's acceptable. And student loans, those usually somewhere around 5%. But make sure you just kill everything else with a vengeance. Find a way. Make a plan, figure out a way to pay off those high interest loans that just keep hanging around that are killing you because you're paying a ton of money to somebody else. So, there's some options. It's not a great idea to take one loan and pay off another loan. That doesn't really solve the problems, but it's a good start if you can get a much lower interest rates like home equity loans. That's one way to look at it. In certain cases, maybe a 401k loan at a very low interest rate to knock out that big debt and then figure out a way to get those 401k loans paid off in the next couple of years. But, key is not let those high interest rates eat you up. Kill it.
Yeah, because the high interest rates are what kill you.
Yeah.
That's going to ruin a retirement plan.
Visa and MasterCard, credit cards, they are multi-million-dollar, billion-dollar companies. And why? It's because people carry debt and are willing to, leave that on the books. And it's a small amount, but, times all the years you carry a few $1,000s in 19%, even 9%. So you can get
the other thing I saw this week was, and I am really for, is getting rid of overdraft fees. I would just hope that they got rid of overdraft fees when your bank account goes over. If you've got a negative balance in your account, they'll let the transaction go through, but they'll charge you $35, $40, $50. And that sends you into debt even more. And it's like, I wish they would get rid of that and just not let the transaction go through.
Well, that's true. They're going to hit you for those. The great idea would be to tie a savings account in to your checking account, and so that if you ever do write a check over the amount,
it'll draw it from
right. Yeah. There's the key, and that's a lot of banks offer that.
Yeah, but that would cut into their profit margin.
That would.
That's no good.
That's right.
844-220-0965. The number to dial us up again. 844-220-0965. Terry in Longwood has dialed us up this morning. Terry, go ahead.
Good morning, Terry.
Hey, good morning. I have a question on something you said a while back, but first let me say that getting out of debt, I'm old now, but I did it when I was much younger, and that's probably the best thing I've ever done.
Good for you.
Yeah, sure is.
But anyway, I'm not bragging but complaining, but I heard something you said about putting your stocks and things that you would have long-term capital gains on outside of your retirement and putting just interest-bearing stuff or something like that in your retirement accounts and take advantage of long-term capital gains. Could you elaborate on that?
Sure. Long-term capital gains are treated differently than regular income, which would be generated from interest and dividends, okay? And dividends are taxed a little bit differently, but basically they're taxed at your ordinary income rates. Capital gains can be taxed at 0, 15%, or 20%. And depending on what your income is, you may pay nothing for capital gains, or you may pay up to 20% for capital gains. So what you want to do is get the things that generate a lot of income inside of your retirement accounts, right, Roger?
Yeah. If you look at the tax on stocks, the gains on stocks, if they're long-term capital gains, you're at a maximum of 20% and maybe less. If you have those stocks in an IRA, and I understand maybe that's the only place you have money to buy stocks, but if you have it in a IRA, and it grows, and you don't get to use that 20% with the IRA, because when you take money out, it's all ordinary income, which could be up in the 30% range. So that's the strategy that we talked about there. It doesn't work for everybody because of the, where their money is. But if you can grow stocks at equities at 20% or 15%, they're better approach.
The key is to, as I said, is to put the taxable things that throw off a lot of taxable income into your retirement accounts. And when we manage portfolios for clients, if they come to us with retirement accounts and non-retirement accounts, we look at stuffing as much as we can into those things that throw off the regular taxable income. I'll give you an idea what that benefit is. I'm looking at my chart here. If you're, are you married, Terry?
Yes.
Okay. So if your taxable income is $78,750 or less, you pay zero capital gains. Okay. If your taxable income falls, let's see, where is that? You're going to pay 20%. If your taxable income is over $400,000, $408,000. So you're not going to hit that 20% rate unless you have a high amount of income. So generally it's going to be 0 or 15%, which you'd rather have taxed at that rate than your regular income tax rate. So that's why we do it. That's what financial planning is all about, and that's the things that we bring to the table as certified financial planners for our clients.
Yeah, I've done it kind of backwards. So I've got stocks in the retirement account. Should I maybe just go ahead and switch that over?
All depends on taxes and what you may owe in doing that.
Yeah.
You can't really just whip them out of the IRA without paying taxes. So you may have to sell that there, and then you're buying fixed income there. And then if you have the money in the other side and you had a bunch of fixed income outside of an IRA, then you could use that money to start purchasing equities.
Yeah, you got to be careful.
I can do that, but I'm only getting something like 2.5% or something in the
savings
in the income stuff.
Right.
So it's not like I have a high interest rate, but it's still smart to do it that way.
Yeah, because you see what's going to happen. Any gains that you have in the retirement accounts are going to be taxable as ordinary income when they could be taxed as 0 or 15 or as maximum of 20%. That's why you want it outside the retirement accounts.
Yeah. Okay, so even I'm 66, and it's probably still a good time for me to go ahead and...
Sure, you're going to be paying taxes the rest of your life.
Okay. Well, great. I appreciate the income. Yeah, I appreciate the information.
All right, Terry.
We're not going to be sending you a check, Terry, but...
well, information is income as well. Yeah,
there you go.
I count information as income. That's huge.
That's right.
Used correctly, yes.
By the way, I want to mention as well is that Rodney Ownby, our certified financial planner and also a CPA, is in the office this morning taking calls as well. So if you have a lengthy question and you want to talk to Rodney, he's there in our office. You can reach him right now at 407-869-9800. That's 407-869-9800. Or very simply 1-800-EXECUTE as if you're executing a legal document. So Rodney is there. He'd be glad to take your call. If the phone's ringing, he's talking to somebody else, he will put you on hold and he will get to you or he will call you back. So you can take advantage of that as well.
All right. And if you want Terry's line, it's 844-220-0965. 844-220-0965. We will continue to play it tomorrow.
Today.
The Certified Financial Group right here on News 96.5 WDBO. And it's all a part of our Ask the Experts weekend. We're taking your phone calls at 844-220-0965. That's 844-220-0965 with Joe Burton, Roger Johnson, certified financial planner professionals at the Certified Financial Group. And we're doing it all the way up until 10 o'clock. So now is plenty of time to get your question answered. We're also answering your text questions at 21232. That is 21232. Now, Joe, before we continue on.
Sure.
About 4 weeks ago, we had a caller named Gene.
Yes, sir.
Call, and I want to replay this for you.
Before we replay it, let's tell our listeners kind of set the stage.
Set this up
if
for
we
us.
can. Gene called, and as we recall, he was a Korean veteran and was struggling financially. And as I recall, he also had a couple of tenants, if you will, living in his house to help pay the rent, and the tenants weren't paying their rent. And we had asked him to, in fact, I think you passed his information along to somebody else we thought might be able to help him.
We did. We gave him to Tom Olson's office, and I talked to Rob Solomon there, who does landlord tenant.
So we want to replay this. And Gene, if you're still listening out there, we would like you to call and leave your information. We'd like to help you in some way. I can't guarantee you we can help you, but the consensus is in our office. After we heard your call, our hearts went out to you. We want to help you as a veteran and as a whatever.
Yeah, so we just want to replay this.
We just want to help you.
If Gene, if this was you, or if you know Gene,
yes,
please give us a
call.
call.
Gene, good morning.
Good morning. Good morning. I'm a 83-year-old Caucasian male. Lived in my house 62 years. And I'm in financial trouble so bad I don't even know where to turn.
Oh.
Reverse mortgage people tell me that I don't make enough money to qualify because of my debt ratio. Yeah. And I need a roof on my house in the worst way. And I can't find anybody like FEMA or anybody else that might be willing to help. So I don't know where to turn.
So that was Gene. He called on June 1st.
Yes. So, Gene, if you're listening or if you know Gene, call into the studio. We don't need to put you on the air unless you want to talk. But please give Kyle, if you want some, I can't guarantee we can help you, but we'd love to try. So give Kyle your information. We'll reach out to you next week, give you a call, and see if we can't do something for you and where we may go with this. That's what we're all about, Certified Financial Group, and not just managing money. It's helping people in the community. So please, if you're listening, Gene, give Kyle a call, confidential, and we'll try to help you and see where we go with this.
Yeah, we'll just leave your number, and we'll give it to Joe, and Joe will give you a call. Yes. If you know Gene, if that voice sounds familiar to anybody, we'd love to get Gene back on the line and talk to him. But then as we come up here on the bottom of the hour, we'd also like to talk to you as well. 844-220-0965. That's 844-220-0965. We also have the text machine up and running as well at 21232. That is 21232. I do see we have a text question in. We'll get to that on the other side. You're listening to On the Money with the Certified Financial Group right here on News 96.5 WTBO.
This is News 96.
Welcome back. This is On the Money with the Certified Financial Group right here on News 96.5 WTBO's Ask the Experts Weekend. We are here with the Oracle of Orlando, Joe Burt and Roger Johnson, Certified Financial Planner Professionals at the Certified Financial Group. And we are here to take your phone calls at 844-220-0965. That is 844-220-0965. We also have the text machine up and running as well at 21232. And Joe, for everybody that may have joined us during the latest news, weather, and traffic and tuned in for the first time, what can they call you about this morning?
Once again, Roger and I are here to take your questions, anything that might be on your mind regarding your personal finances. This isn't a 1-hour infomercial about who we are, what we do. We're here to help you. Things that might be on your mind, decisions that you're trying to make. As Kyle says, it's that Mythbusters, right, Kyle? The Mythbusters?
The Mythbusters.
How does that work?
Well, I mean, if anybody has ever told you anything at all about financial planning and saving, my sister's neighbor's cousin's brother-in-law said this, and they saved so much money, and you know what? I'm going to have to try that as well.
Yeah.
And you're just, double, I'm driving down the road right now going, you know what? He's a plumber. Does he really? Let me double check.
Brother-in-laws usually have all the answers.
Yes, just to make sure that that's correct. That's what we can do for you on the radio.
That's what we do. So if you have any
time old thing.
If you have any questions regarding your personal finances, decisions that you're trying to make regarding your 401k, what should I put my money in? Where's it going? How do I do an IRA? What are the limitations on that? Well, what kind of life insurance do I need? Do I even need life insurance? About mutual funds, what to look for in a mutual fund, all those questions that you have to deal with day in and day out that they don't teach us in school. We are here to help you out. So if you have any questions, and there's never a question that's dumb, because I can guarantee you if you're thinking it, there's 246 people out there that are thinking the same thing. All you have to do is pick up the phone. You don't even need to use your real name and dial these magic numbers, because we are here to help.
844-220-0965. 844-220-0965. And now that I'm thinking about it, if you've even heard something on the internet that you're just, you know what, let me double check, that's a good way to call, because the amount of crap on the internet.
I have heard some of these ads on the radio that are very, should I say, questionable?
Yeah, Mythbusters, anything at all.
That's what we do.
Give Joe a call, 844-220-0965. I think I saw something on the internet the other day that if you bought E-bonds with Sacagawea gold coins, it got double the interest rate. Now that's, you never know what the internet's going to throw out there. So just in case.
How about this thing that was going around? You may remember this, Roger, a couple years ago of buying the Iraqi. I forget what the currency.
Oh
is.
yes,
Yeah.
right. The
Iraqi currency. Yes.
I don't know, what the heck was it?
it wasn't a ruble. It
was dinari?
Dinari. Yes.
Yes.
Yeah, that sounds
Buy
right.
the-
Yes.
Buy
That sounds
because you
right.
could buy it and then it's so devalued when it goes up in price. You
Yeah, we
spend
did have a
1,000
caller
or
on
$10
that. I
million.
remember we had a caller.
Yeah.
Thought this might be the way to
This is the way to instant
wealth.
riches.
Yeah.
Yes.
Yeah.
There's all kinds of stuff.
So I got a text question in here for you.
Okay.
Yeah.
Got $74,000 cash. Should I buy a rental or invest in stock market? 47 years old, looking to park money for the best ROI. Own 4 homes. Cash out, please.
Well, for those folks that might not know what ROI is, it's return on investment.
Yeah.
So here we are. He's 47 years old, already
debt.
has 4 homes, cash out. I guess he's all cash. He doesn't have any mortgage. That's what I would presume.
Right.
So he wants to know whether he should buy another house. What do you think, Roger?
Well, I mean, 74,000 is not going to really buy him. He's going to have a house to rent, so he will all of a sudden have some debt with that.
Right.
That he's
Use
not
it
going
as
to be able to
down
do that. And my thought would be, if you've already got 4 homes that you're renting out, you've done a really good job. Make sure that those get paid off, and you got plenty of equity in them, rather than maybe bite off another one. Maybe keep that money more liquid. And if you don't have anything in equities, I mean, stocks over time do very well as real estate. So maybe diversification with that 74. Maybe start a retirement plan. Get a tax deduction for putting money into it. There's a host of ideas.
Yeah,
the
first thing that I would want to know is, are you where you work? Do you have assuming you have a job? Do you have a 401k? And are you maxing out your contribution to your 401k? Because you get a tax deduction for that, the money will grow without being taxed. In this gentleman's, or I presume it's maybe not, in this person's, I should say, situation, they already have 4 homes. Obviously, they're used to managing property, which is better than perhaps somebody who want to just get their toes wet, because we see that a lot. They go to these seminars about flipping houses and buying a house and become a real estate magnate. For some people, it works, and some people, it doesn't work at all. And they say it's the worst thing I ever did. And every situation is unique. As they say with real estate, it's location, location, location. And with investing, it's timing, 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 and diversification. There's no perfect investment. Everything is unique, and everybody's personal psyche, if you will, is unique to be able to manage that particular form of investment. So if you're comfortable doing the real estate, go for it. Yeah. You obviously hopefully know what you're doing in that regard. But I would look at also the ability to get some tax deductions with that $74,000 by maxing out the contribution to your 401k, and if you're married, for your spouses as well.
Yeah, not everybody's cut out to be a landlord.
Right.
Yeah.
Right.
And apparently he is, or she is. But
Right, if you enjoy doing it, yeah.
Sure.
But my thought would be diversify. You've got a lot of money in and equity and wealth in real estate already. Let's look at something else.
Yeah, the risk that you run is we have another, heaven forbid, 2008, 2009. But if you own the properties all cash, you don't have that risk. So that's leverage is a two-edged sword.
People have to live somewhere,
Yeah,
so
exactly.
you're going to have that rent probably
but
coming
you got to
in.
get them to pay the rent.
Right, if
Yeah,
somebody leaves and you need to have that liquid asset.
Yeah, it's paid in cash. You can control the rent to make sure it's full. There's still a demand.
Right.
That was a text question. If you want to get your text question in at 21232, that's the number to do it. 21232. We just ask you to keep it to 160 characters. Another text question in here. Is Jody Murphy still your go-to estate planning?
Yes, she is. Jody, we've worked with Jody now for probably around 10 years.
I haven't had Jody Murphy in the studio in a while. When's she coming in?
The thing with Jody is her daughter is a semi-professional golfer at the age of, I think, 12.
Wow.
And so they spend their weekends traveling the countryside with their daughter. Her husband, Matt,
he's a big golfer.
He's one of the tournament champions, not tournament champ, the club championship, if you will. Yeah. By the way, our own Harry Stadelmeyer won the club championship up at Heathrow.
Oh, when does he never win? Yeah. Harry's always winning those golf tournaments.
He's the Cinderella boy.
Yeah.
Yeah, he does.
He did that. So he got all the tips from Arnold when he was out there running the
Yes, you're
Arnold
talking.
Palmer Invitational.
You're talking like he's an amateur. I mean, he's golfed with some of the biggest pros.
Yes, he has.
The biggest names in golf.
Yes.
So I'm sure he's picked up some stuff.
I think so too.
And
But
if I
anyway,
had to
Congratulations,
bet,
Harry.
where would Harry be right now?
Golf course.
Correct, sir.
I could. We didn't even have to finish the question. Jane in Winter Park's got
Hello,
an R&D
Jane.
question. Jane, go ahead.
good morning, Jane.
Hey, good morning. My question is, I'm 72 years old. I retired in 2015, but I went back to work and I work part-time presently. So my question is about the retired minimum distribution. It irritates me that every year when I have to take the required minimum distribution because we don't need it as far as meeting our everyday,
Right.
financial needs. So my question is, since I'm working part-time, if I put some money in a retirement account through my employer, do I still have to take the required minimum distribution?
Well, there may be some good news for you, Jane. Are you eligible for your employer's 401k plan?
Yes.
You are.
Uh-huh.
Well,
Right.
here's the good news for you for the day. You can,
All right.
You can roll your IRA into your company's 401k plan and quit taking the RMDs until you stop working.
Oh, really? Okay. Well, I'll check on that. That is some good news.
Yes.
Yeah. And the other question I had was, since I am working, but I am eligible for Social Security, which I did take a couple of years ago.
Mm-hmm.
But so the bottom line is, when you're working, and do you still have to contribute to the Social Security
Yes.
Mm-hmm.
Yes.
Yeah.
all the time?
Yeah.
Okay, no matter whether you're actually on Social Security or not.
Right.
Yes.
Right.
Okay.
And if you can't
All right.
roll that IRA into the 401k, if there's some kind of rule that precludes you from doing that, maybe the next
Right.
best thing would be to put some money into a Roth. You're not going to get a lot of years of growth, tax-free
Right.
growth, but it's
Well, we do have, my husband and I both have a Roth account.
Mhm.
So I guess that was one question I was having. If we don't have to use the money on the required minimum distribution to live,
No, you
You
can't.
know,
I know what the question is. Can you roll that straight into a Roth? No. Sorry,
it
unfortunately.
has to be taxed.
Yeah,
I
so
guess,
your best
right?
bet is working that idea that Joe came up with, which is
Okay.
try to relocate that IRA money into
Mhm.
your company plan and
Okay.
not
Well,
have
I'll
to
check
take an
on that.
RMD. Yeah.
All right. Thank you. I
Okay,
appreciate
Jane,
your
we
help.
appreciate the call. Thank you very much.
Bye-bye.
All right. If you
Thank
want
you.
Jane's line, it's 844-220-0965. That is 844-220-0965. We have another text question in at 21232. If I retire with a pension in Florida, then move to Tennessee, does Florida tax me?
Where's your residence
If
going
I
to be?
retire with a pension in
Florida, and then move to Tennessee,
No.
No.
does
I mean,
Florida tax me?
No.
It all depends on where his residence is going to be. If he's going to move to Tennessee completely and not keep a residence in Florida, then Tennessee rules come into play.
Florida has no state income tax, so there's no taxes involved there. What he'll have to pay is Tennessee income tax,
No,
as well
Tennessee income
as well as
tax,
federal
yeah.
income tax.
So if he lives in Tennessee the majority of the year?
It's 6 months and a day.
I'm not even
That's
sure
his,
there is
That's his residence.
Tennessee income tax.
I believe there is.
I think there is
Yes,
too.
there is.
Yes.
Yep.
I know that
It's
because my
not
wife's from
much.
Tennessee,
Yeah,
and
okay.
she used to mention it.
Yep.
All righty.
I don't know if there is anymore, but
No, there is. There is. Yeah, I'm
Something
99%
being
sure.
phased out there. I cannot remember exactly. There is some kind of a phase out tax rule going on up there, but
oh, okay.
Oh, yeah, because you looked at property in Tennessee, as I recall.
I did.
yeah.
Yes.
You're checking that out. Anyway.
Yeah, most people retire to Florida. I'm going to retire to the north since
Yeah.
I've
Now,
up here my entire
if they
life.
keep a residence in Florida and also have a place in Tennessee,
well,
as
6
long
months
as,
in a day. So if
Six,
they just
right.
want to go
Mhm.
spend their summers in Tennessee,
Mhm.
they'd be
That's
in
a
good
smart
shape.
thing to do.
Yes.
if you can swing it and keep a place down in Florida, then you do most of your work and living, your data, your driver's license, your things you do in Florida. You do it in Florida, and you maintain your residence in Florida. Then Tennessee does not come into play at all.
All right. Well, just like that. 844-220-0965. The number to dial us up again, 844-220-0965. 0965. Well, the phone lines, text lines, and the Facebook comment section is not the only way to get your questions answered. They're not the only way, even on the radio today. The Certified Financial Group has another tool for you to use to get some great information, and they're called the workshops. What kind of workshops do we have upcoming here, gentlemen?
We got a bunch of them coming up. Of course, right now, today, at this very moment, healthcare options for retirement, and Gary will be doing that. Gary Abley will do that again in a few months. The next one in July will be Countdown to Retirement. August will be Financial Basics, Key Elements to Your Successful Financial Plan. September, he's going to do one called Will Your Savings Last You a Lifetime? And September will be Everything You Wanted to Know About Mutual Funds. So you can go to our website, click on, which is financialgroup.com, click on workshops, and you'll see that list. And they're all on Saturdays, starting at 9 a.m. And you can feel free to register for one right online.
Right now, as Roger alluded to, Gary's doing is healthcare options in retirement. It's going to go till 11 o'clock. You can still catch about an hour of that if you get there soon.
Plenty of time.
And it's good information. As we say, when you turn 65 or just before you turn 65, your mailbox explodes with all that information about Medicare, and you have to make decisions. Gary's there to clear up the mind fog. He's a real expert in that area. He's a certified financial planner as well as a CPA. He's one of the 12 certified financial planners that we have under our roof at Certified Financial Group, and he'd be glad to have you come on in. He says at least you can come by for a cup of coffee and a donut and learn more about what we do. Yep. Leave your checkbook at home. It is absolutely free.
June and Janie, hang on the line. You're going to be first up right after we get the three big things you need to know. Welcome back. This is On the Money with the Certified Financial Group right here on News 96.5 WDBO. We are here to answer your questions at 844-220-0965, and we only have just a few minutes left, so let's go to June in Altamont Springs. June, go ahead. You're on with the Certified Financial Group.
Hi, June.
Hi, thank you so much for taking my call. I appreciate it. My question is, in expanding on the last caller's question about taking the money that you have to take out of an IRA, can you put it into a? You said you could put it into a 401k.
No. You have to do a direct transfer from your IRA into your 401k plan.
Correct.
Yes.
Correct. Well, what if you were self-employed? Could you do that into a SEP account?
No,
not a SEP, but you could, if you're self-employed, you could start a 401k, a uni-K they call it. It qualifies as a 401k, even though you're the only employee. And
correct.
And then move the IRA into that 401k.
No.
You don't think so?
You can't do it.
Because of the owner?
Yes.
Ownership of the owner?
If you're more than a 5% owner of the company, in this case you would be, that rule doesn't apply about rolling your IRA into a 401k.
Yeah, very good financial breath.
Yes. But June, that's a great thought. And before we get too far in, we had you were talking about the Tennessee taxes there. And we were talking about the gentleman who wants to know about a pension. He's going to move to Florida and moving to Tennessee and want to know about taxes and so forth. And we said there's an income tax in Florida. Jim Wade, CPA, who is a listener, and we appreciate your call in, Jim. It's nice to have professionals listen to us as well and keep us on our toes. Jim tells us that the Tennessee tax is only interest and dividends earned by individuals, not your pension.
Not income.
And not income.
Right.
So
there's no income tax in Tennessee.
Interest and dividends. Jim Wade, we really appreciate your call. Thank you so much for listening. And we got a call here from Janny.
Yeah, I was right on that one, Joe, wasn't I?
You were right there.
All right.
Financial planning breath.
There you go.
There you go. All right. Janny, good morning. How are you? Janny's got a call here. Recently divorced. Wants to know the best way to start an IRA. Janny, are you there? Hello, Janny. Well,
Janny may have
back.
Yes, I'm here.
Oh, you're there.
Good.
Okay, Janny. Okay. So tell us about your situation.
How can we help?
Okay. Well, I'm 57 years old. I'm recently divorced. I am entitled to portions of my ex-husband's pension and retirement account, plus a 401k, and his Social Security, of course. But that I have an employer that I'm 100% vested, and currently I have myself in a 2030 Roth IRA, taxable. And I'm wondering if that is the best benefit for me at this age, or should I put it into a non-taxable 401k?
Well, you have a 401k through your employer?
Yes.
Okay.
with a 6% match.
Well, okay. How much are you putting into your 401k, Jenny?
6%.
Okay. At your particular age, you could put $25,000 into your 401k, which is
I wish I could do that, but
yes,
financially, it's not.
That's the best
feasible.
approach for the most money you can put away in retirement for retirement. Your 401k might be the best approach here, is what I think we're saying.
Right. But my question is, should I go for the pre-tax now, or should I wait to be taxed later?
Okay. Your question is, should you do the Roth and get no tax deduction today with the idea that it'll be tax-free when you withdraw it, or take the tax deduction today and then pay the taxes when you withdraw it in your later years, right? That's the question.
Correct.
All right.
All right.
Well, I've got some strong feelings on that. If you're in the 15% or higher tax bracket, I would take the tax deduction today because the bird in the hand is worth two in the bush. Under current law, the Roth is totally tax-free, but nobody says that the laws will not change. A lot of people don't remember at one time Social Security was totally tax-free, and in 1983 they changed the rules, and now you pay taxes on up to 85% of your Social Security. It's what's called means testing. I'm concerned that somewhere down the road, the government's going to see all the billions of dollars out there that have never been taxed, and they will begin to means test the tax-free growth that you've had in those accounts. And I can't say that will happen, but anytime Congress is in session, Jenny, your money is in jeopardy. So I would take the bird in the hand, which is the tax deduction today, and worry about the future and paying taxes, because who knows what the tax laws will be down the road. And there you go.
Yeah. Thank you for confirming that.
Yep. And once again, Rodney Owenby is in our office. If you have any questions that we haven't answered, he is there. He's going to be there a while. You can call him directly at 407-869-9800 or 1-800-EXECUTE as if you're executing a legal document.
Real quick, let's correct that Tennessee thing real quick on the income tax.
Yeah, we did.
We did?
got it.
Okay,
Yes,
perfect. Yes, just want to make sure we got that
Yep.
before we got out. And that's going to do it for this week's edition. We'll continue to play it tomorrow.
Today.
Well, next week, around Saturday, 9 a.m., right here on News 96.5 WDBO.
This is News 96.5.
Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussions and answers to questions do not involve the rendering of personalized investment advice, but is limited to the dissemination of general information. A professional advisor should be consulted before implementing any of the options presented. Certified Advisory Corp is registered as an investment advisor with the SEC and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. Information presented on